But we start off with Apple surging into the close to end the day up more than 10%. That is yet another all-time high and its best day since mid-March. And get this, Apple gained 14% since Monday, its best week since 2006. So is Apple now the king of the market? Brian Kelly, you were worried about price action today's session. We were worried about opening at the highs, never seeing those highs again. And here we have great price action. What do you say?
Yeah, so last night and then even this morning, I was very concerned that we had these blockbuster earnings from big tech, and the market just was not responding. I will tell you, though, the standout was Apple all day long. And so that gave me a little bit of confidence. And then you saw it just continue to be strong the whole time. So let's look at Apple. What happened, right? They had tremendous earnings. They've got multiple catalysts coming up. And this narrative about the services becoming a bigger part of their earnings is actually starting to take hold. So now you can argue, and of course, you can argue that it would deserve a higher PE ratio. I find PE ratios to be absolutely absurd, but that's an aside. As long as everybody else believes it needs a higher PE ratio, then it gets a higher PE ratio.
And here we are. Bono, and what'd you make of the action?
Listen, I mean, BK or Beakers, I'm not sure what you're calling him these days, but I mean, he knocked it out of the park just like Apple did. I mean, if you look across their verticals, Macs are up in terms of sales, wearables are up in terms of sales. The service business, although came in slightly lower than expected, I still think that was up about 15%. $6 billion in revenue for the quarter, $258 per share. I mean, there's not much not to like. I think the story leading up to it was whether or not these big tech companies could justify their valuations, or whether or not they were just a safe haven. And we've seen, and they've shown, that this is a two-pronged attack. They do have fortress balance sheets. They are still very much a growth story. I think you continue to ride this trend higher.
I think, though, at this point, with a 10.5% move in a single day, Steve Grasso, what can get us to the next level in terms of PE, especially for a company that is not providing guidance? And granted, not many companies out there are providing guidance for even the remainder of this year, but a company like Apple, with these games, do you need that?
I don't know if you need it, but I think what you need, you have. You have the split. You have the 4-for-1. I think retail is going to be chasing that. The split, the retail is going to be chasing the dividend. There's going to be a couple things they're chasing, and they have them all. But if you look at hardware, $215 billion in hardware. You have 46 and change, maybe 47 billion in services. Bono said it's a growth story. Market didn't believe it was a growth story. Now it's starting to see it's a growth story. I'm wearing the wearables right here. That's a bigger story than ever. I was tempted to get back in today, Melissa. I told you last night. I didn't get back in yet.
On this move, you're going to get back in?
No, I can't. I can't get back in on this move. But sometimes you have to hold your nose and not let your own thoughts sort of talk you out of a trade. I do believe it goes higher into that split date in late August. I could miss another 5 to 10% in this stock move because I'm being too proud.
Carter Worth, there are a few things that Steve Grasso said that I wanted to ask you about. For one, will there be a run into the stock before the split? Have we seen that this is what I think the 5th split for Apple or the 6th split for Apple. Have we seen this before? And what does the chart look? Was this a breakout today?
Sure. I mean, obviously, it's a gap up on exceedingly heavy volume to a new 52-week high, an all-time high. But I think one thing that comes to mind is maybe it was about a week ago, and we were on together, and we were all talking about which was going to be the first one to get to $2 trillion. Mm-hmm. I picked Amazon. I know, Bonwin, you picked Amazon. I think maybe someone else might have. But here we are, and it obviously looks as though Apple, at least at this pace, is the one that's going to get there at 1.8 plus. So the thing is this, there's always another way to interpret it. The price action today, it didn't fade as some would have thought. I actually thought that was going to happen, and BK mentioned it. But here's the thing that seems curious. Despite all of this, and it was one heck of a day, the QQQ still didn't make a new high. It was the 13th, mid-month of July. Netflix flubbed its earnings report, and that still remains the high, meaning with Apple doing this and Amazon doing this and Facebook, we couldn't make a new high. We're still below where we were on the Netflix slip. That seems curious. And I think it's something that needs to be sort of taken note of.
So when you say it's curious and it needs to be taken note of, are you saying basically that there could be some weakness in tech overall that Apple, the strength in Apple, is now masking?
Well, no, it's not so much that. It's that if there's such thing as latent potential, i.e. you have potential before an earnings, and then you have exploitation of potential. After earnings, you beat, let's say, as Apple did, as Facebook did. And now what? Meaning, are you get immediate follow-through on Monday or Tuesday? Do you get the cues to new high? We've expended a lot of energy. We've had fundamental results, and still, we set our high for the NASDAQ as far back as the 13th of July, and now we're August 1. It just seems curious that it couldn't make a new high with all of the good news today.
BK, the one thing that we didn't touch on in regards to the stock split is the impact it would have on the Dow versus the S&P 500. You split Apple, and of course, price-weighted index like the Dow. You're then diluting the impact of Apple. You're only taking a quarter, right, of the gains that would be a positive for the Dow in the S&P 500. So that divergence, we could actually see that grow as time goes on because of this split.
Yeah, I mean, I think that's interesting. This split is going to be very important. And, I loved how Carter described it as latent potential. There's been times in my life that I've been described as having latent potential.
I have latent potential, too. I mean, I hope it's still in there.
Exactly.
Not fully
exactly.
exploited.
So,
Right.
But I do think, as crazy as it is, it shocks me every time. But when a stock splits, people seem to like it. It goes up. There's nothing different about the company. Nothing's changed whatsoever, except the price of the stock is lower. And human beings like to buy a full share, 100 shares. They want to own one Apple. So it's a crazy thing. But given the fact that this market has a propensity to be retail driven, I actually think going into the end of the month, that's going to be a catalyst for this stock. But as you say, you're talking about 4 or 5 companies that I do think they could be masking some weakness. Makes me a bit concerned. We saw, the bond market this morning yields were a little bit higher. That would not be good for this trade. So there's things on the horizon that I'm cautious about. And with euphoria like this, I get extra cautious. But in the terms of Apple, I think just going into that split, you're going to have retail traders pile into it.
Wait, hold on, BK. When you say bond yields or a little bit higher, by how much? I think I must have missed that.
Well, you must have missed it. But so here's what was curious about it, right? Is that when the stock markets were falling this morning, you actually saw yields tick higher a bit.
Okay.
And so if we're talking about negative real rates, and I don't want to get too wonky, but that's driving a lot of this market. That's the drumbeat. If that starts to reverse, then it's going to be, then big tech's going to be a problem.
Yeah.